Okay. Hello, hello, hello. How is everybody? We have virtual students tonight? Hmm. Okay. So are you guys ready for the accounting action? Not really, huh? I had to try. You told me that Wednesday sessions. There we go again. On virtual, so I'll be right back.
Put it on. Spend that, make no sense at all. You know, that's why I'm supposed to be inside them. We couldn't do it inside. Okay, thanks, like. Yeah, that's it.
Isn't it? This is- that the-
We don't.
I'm sure you'll see that.
Oh, I'm sure they don't wanna buy the new one.
Oh. So the other ones are just like this. This is working. I know. Yeah. I'll have to find some experience. Okay. Okay. Oh, I understand the textbooks are not here yet. Did she say when it might be here? Hopefully tomorrow. Yeah. We got promised looking better. I don't know. We'll have to wait and see how that. Hi, accounting. Hi, how are you? Come right in. Grab a chair. Who's on this machine? Anyway? No one. I hope. So, no textbooks yet? They're not making my first thing easy at all. The textbook, no. Does anybody have a textbook from anywhere? That's you borrowed it. How did you get one? Oh. Before we ran out. Okay. So if anybody wants to hang on, they could. I will harass her or take her book from and threaten her. It's not being so rich, you guys. That's what I was textbook. See if I can find the child you guys with that text. Okay. Let's see who's in the room first of all. These don't work. Thank you very much. Oh, these don't work either. Oh. Found them. Okay. Let's see if this works. A little bit. Samantha. Oh, you're right over there. Oh, darn it. And at least I can put a face to the name now. Samantha's here. Fantastic. Melissa. Oh, sorry, Melissa. Thank you. Excellent, excellent. Melissa. Great. Forbes.
Sanchia.
Sanchia.
Me.
Sanchia? Okay, hi Sanchia. Sanchia. You were not in our virtual session. Okay, so now, Sanchia, you have an obligation to us. Your obligation is to introduce yourself to the class. You missed that session on Monday. So introduce yourself to us. Tell us anything you feel like telling us.
Good afternoon, everyone.
Hi. I like that old school. Way to go.
My name is Sanchia Forbes, currently unemployed.
What does unemployed mean?
Not working.
I know, I'm just teasing. Accounting is boring. I try. Okay, and you doing accounting because?
Do my resume and for studies.
Okay, so you are unemployed but actively seeking employment. What kind of work would you like to do, Sanchia?
Well, before January, I was at Fidelity. Before that, I was in the customer service, guest service field, or banking.
Okay. So why did you were in banking, why aren't you still there?
It's a long story.
Well, you can see from the color of my hair, the long stories don't scare me at all. I know it's a long story, okay? Not to worry about it, you keep going where?
Forward.
Absolutely, and we always learn from our
Uh,
past experiences, that's the key. I was just talking to my son today, my oldest son, he's some network tech guy, somewhere the hell in New York, I don't know you got that. Anyway. To send them to COB and they'd be home. Anyway, sending kids to these fancy universities and then but the same thing, folks have all kinds of idiosyncrasies on the job, wherever you go, people have stuff going on. And you're fighting to find ways to deal with all the various idiosyncrasies. And so I have to encourage him, both of them. You know, put it behind you, keep moving forward. Wherever you go, you're going to find rotten eggs. There's no escaping them. You just have to find a way to work around them. Absolutely. So keep on. And you're in the classroom with some other people, you never know. You have 7 weeks to network. By the time you're done, somebody might say, hey, you worked at Fidelity, we could. What do? Give them your resume. Yeah, crap like that. That's how you do it. All right, welcome aboard, Sanchia. All right. Crystal.
Here.
Oh, Crystal over in the corner. Okay, Crystal, yeah, you were there. You don't have any obligations. Okay. Who's the other? Mona. No more. Okay. 10, something line. Teeth at Jeffrey. And Lisa. Aisha. Wilson, somebody Wilson.
Here.
Where? Okay, what's your first name, Miss Wilson?
Real.
Priya Lisa.
Real.
Ah, thank God. If you only know how you say it, I don't know what. I can't even begin to imagine what the next 7 weeks would be trying to remember. What's that again?
Real.
Priya Lisa.
Right.
Oh, that might help. But I'm still sticking to Bree.
No problem.
Yes, fine, but you were not here Monday.
Yeah.
So yeah, introduce yourself like Sanchia.
Okay. I'm gonna stand, but hello, everyone.
Yes, hi.
My name is Bree. I'm a new mom,
Stop the madness. How new?
9 months.
Kiss my foot. And you in this bloody class already have a lot of nerve. Bree?
Yeah. So, currently working at Albany, and I work in hospitality, but accounting right now is just a career switch for me.
Good. Whenever you do accounting, you never waste your time. You always need accounting for something in your life, whether it's professional, personal, remember I told some of you, or otherwise, even though you may not be able to see it now. Always need it somewhere. Sanchia, you're in the what industry?
Hospitality.
Kiss my foot. They're teaching youngsters how to network. See that? She's in the hospitality. So now you have 2 choices. To confront her with, or panic and don't do anything. I'm not asking her to, I say no. Get from in front, whatever. Right, come right in. We just walked in. Oh, sure. Yeah. So there you have it. A word to the wise is sufficient. I'm not saying you have to bombard it tonight, but somewhere along the way, find yourself like. Intro. Until finally, you get over and he's like, can I give you my resume? See? And then she'll say 1 or 2 things.
Sure.
Or no. And she says, no, don't panic. Just wait until the next opportunity. See how that works? God hates me. Let me just go and drink something. Don't do that. All right, way to go. Thank you so much, Bree. Boy or girl? Yes, fine for another girl. I have 2 sons. God knows why he gave me 2 sons. I wanted a daughter like I wanted life itself. And so when my baby was born, I saw the stuff. I'm like, another stuff. And then I said, give me my baby. Absolutely. And God knew why. Because had he given me a daughter, I would be in a holy mess. Because I'd want to pray to hear, put in every little miss singing contest. I don't want nobody to touch her. The first guy who touch her, he doesn't have any sense, and I have to blow his brains out. I'm in prison, the family is saying like that. Because, yeah, so you could see my condition would have been very bad with that little girl. Okay. Rachel. Where's Rachel? Okay, you were here on Monday. No obligations. And who just walked in again? Candisha. Yes, Candisha was here on Monday. Okay, so we have unfortunately, there are no textbooks. They're not making my life any easier by reading it in the textbooks. But anyway, pick out a piece of paper, your writing pad, whatever you want to write on, and maybe you can jot some things down. I'll have to scribble some stuff. You don't have a textbook to read from. If I want you to read something, what we'll do is I'll just give somebody my text like this. And it's like, can you read that section if necessary? but it's always nice to have the text in front of you to actually see what I'm talking about. That's the problem. And so we're going to see what we can do, at least for this evening. Hopefully come Monday, you guys will have your textbook in hands. Hopefully they will come tomorrow. I understand that they expect it here tomorrow, so I suggest you call Ms. Dean throughout the day, find out if it's here. And if it's not here tomorrow for some reason, sound really weird, and call Friday and say things like, the book. So, so I could read chapters 1 and 2 on the weekend. Otherwise, it's gonna be, after all, we only have how many weeks? And in an hour or two, one whole week would have been just like that. So yes, call tomorrow and pull a chandelier, like be persistent now. On it. So you can get your textbook and read chapters 1 and 2 and start putting the pieces together that I will attempt to go through tonight without a textbook. Okay. All right. So let's start somewhere. What is accounting? Let's start there. I think I raised that on Monday. What? Now, what's the name? Sorry, Bree. Bree has a textbook, so she can follow. Is that edition 12E, Bree?
Yes.
Good. So you can follow, and where folks get stuck on the question, somebody says, then you'll help us out. Because other than me, you're the only other one person with a textbook, and two textbooks. So that's good. So you guys can actually like jump in with certain definitions and certain explanations and help your colleagues along until they get their textbooks, hopefully when? Tomorrow.
Yeah, we can share and maybe.
Okay. Got it. I wonder if I can give up my textbook yet.
Tara. Yes.
You like it?
I
I feel so much better. One other person cannot see. Sorry. And she's younger than I am. I feel so much better. For sure. I am certain of that. Don't mind me spreading on doing nonsense. Oh. Really? That's true. Now that you said that, I always tell people that whenever I travel, I can always tell that there's a bohemian in the world anywhere. They always look younger than everybody else. Like a 50-year-old bohemian female looks way younger than a 50-year-old any other female in the world. That's that's like a Black American, some kind of the same thing. That's Indian, it's kind of the same thing. But yes, bohemian women take forever to age. It's an amazing thing compared to other women in the world. People have come up the last year. They had the audacity, like, hey, Wilkie, I see you with that young gal in your car. You know what they're talking about? My wife. I'm like, oh, yeah. I didn't straighten any back. They say, well, she's really, because that's how you chicks are. The human women take forever. It's an amazing thing. All right, there you go. You are?
Mona.
Oh, Mona. Okay, Mona. Lisa. We were wondering if you were just a cool and lonely photo. Have you ever seen a picture of the Mona Lisa?
Yes.
Okay, so you know what I mean. Okay. So Mona Lisa is so famous, and Mona, just Mona. See if you talk about it. All right, excellent. So who else? She's like me. She's all wing it. 2 persons there, 2 persons there. She can. So maybe you want to sit with Mona. You guys can use my textbook.
Okay.
Yeah. And whenever I need it for a moment or something, I'll just grab it and then I'll give it back to you. How about that? It's called improvising. See, pull that in for me. All right, so what is accounting then? Anyone who has a textbook, what is accounting? What is accounting? Let's start there. Makes all the sense in the world. Why study all this other stuff without knowing what accounting is? By definition, what is accounting? I don't mind if you use the textbook. I want you to use it. So those who do not have one can write it down. And we can remember, what is accounting? Anyone?
It's an information system
Yeah, it's an information system.
that measures, processes, and communicates financial information.
Yeah, it's
That
measures, processes, and
communicates.
information. Yeah. Pretty fancy. You have to write quick because I don't remember what I write 1 minute later. That's communication. Okay, it's an information system, financial information that measures transactions and communicate it. You will see very soon how these parts of the definition come together. Clearly, anything involving financial accounting involves financial information, money, transactions, business, things of that nature, financial and business information. How do we measure it? We take those transactions and we transfer them to dollars and cents. So if you buy something, that's a purchase. You sell something, that's a sale. You pay an expense, that's an expense. Okay? All denominated in dollars and cents. And then finally, once we have all this information compiled somewhere, we communicate it. And how do we communicate it? Yeah, through financial statements. Okay? We communicate it through financial statements. And so hopefully now, when we're done tonight, and you get your textbooks between tomorrow and Friday, and you go home on the weekend to catch up on your reading for chapters 1 and 2, and all that, all these little bits and pieces will be even clearer to you. Okay? So that is our definition. What about this expression? Economic activity. That comes right afterwards in your text. Economic activity. Sorry, before you answer that, for those of you who are not here on Monday, let me just give you the information that you missed. This is me, Samuel Wilkinson, your lecturer. For those of you who are not here on Monday, please make a note of it. And my email address is S. Anybody remembers? Anybody wrote it down?
SJH.
Yeah, SJH Wilkinson, yes. Yes, I'm Hotmail. Mail.com. And my cell number is what again, anyone? 565-9555. Absolutely. Send me an email anytime throughout the semester. You get whatever it is, doesn't matter. Or drop me a text if you prefer to do that. I'm always checking stuff for other reasons. I have clients who are harassing me all the time for stuff. So I'm always checking email, sending email, checking this, checking that. I was telling the group the other day, I did all kinds of crazy things in my life, from retail banking, for those of you who are just here tonight, to private banking, to regulatory work, to consultancy work, to all that crazy stuff over the years. Okay, so, and I've been lecturing for this. Why you can't give away the age anymore? It's long. Must be at least 30 years. So I've taught at all the local universities. Anybody remember St. Ben's and John's University? That used to be on St. Augustine's campus? No, my God. I feel like such an auntie. Why did I say that? Okay. Well, that's one of the places. Anybody remembers the old Success Training College? Okay, remember that one, yeah. So, yeah. I know you know UB. That's why I started back in forever ago when I am Afro and all that. Can you imagine that? Thin. With an Afro like that. My dope. My sons laugh at me all the time when they come home. They look at my picture. Like, Dad, that's you. Like, you're damn right. Just wait a couple of years and you'll be from there too. But that's where I started lecturing part-time. I did all of this stuff part-time because my full-time job was that of a banker and an accountant and stuff like that. So I had a very busy time. And still, so I have clients who I do client work for and consult, so I'm always checking, that's the point I'm making. So send these stuff as I'll see it. If I don't get back to you in 24 hours, something went very wrong or I died. So I'm just trying to bring the county is boring. She's like, oh my God. I'll try to get back to you as quickly as I can. If you don't hear from me in 24 hours, just send me another note. Like some students after a while, they do like this. Super similar. I say, hello, what the hell? Kind of thing. Did you get the feel free? All right, to do that. Okay, so for those of you who missed it on Monday, that's just a little quick synopsis of my background, just so that you can have the comfort that I at least have an idea of what I'm talking about. Okay, so right on the heels of accounting, we have this expression called economic activity. Now, how does your textbook describe that? Economic activity.
Economic entity.
Oh, entity.
Yeah.
Okay. Well, you are actually looking and not taking my word for it. That's good. What did it say about the economic entity?
A unit that exists independently.
Yeah, an independent unit. Anything else? That's it?
Such as a business.
Okay, any kind of operation. So if you didn't know before, you now know that an entity is any independent operation. Are we entities, individuals? Human beings, we. Are we entities based on this definition?
Yeah.
Of course. Why? Of course. You don't need my help to move your hand, do you? You do it by your. Even though we're all created to what? Interact. We were all created to be what? Independent, what? Not economic, but human entities. You know that works? Anything that works independent. And so any business house operation program, charitable, non-charitable, profitable, non-profit, whatever it is that operates, it's considered an economic entity. Does your text say anything else about economic entities? So I just say, well, that's it. Move on. No? Nothing else?
Move on to speak about accountants.
Yeah, we're on to the little yalla in between, which you will read eventually. Okay, but really, when we talk about economic entity, we're talking about this independent unit that is involved in what? Typically from business activity, whether profit or non-profit. Anybody knows what a non-profit entity is? What do you think a non-profit entity is? We already know what an economic entity is now. What do you think of non-profit? Ever heard that word? No. Well, that's the other interesting thing about accounting. You will not only be hearing about debits and credits, but journal entries, ledgers, and all that, and financial statements. You'll be hearing about other little things like profit and non-profit, other words in business that are not necessarily directly connected to the processing of financial information. And that's the beauty of it, because now you're going to be seeing a whole lot of things coming together, which you will come into contact with no matter what kind of work you do. Okay, that's the deal. All right, so this economic independent business entity then as we'll see later on, is full of resources that we need in order for it to work, like people, capital, which is money, and sometimes referred to as land. Land, people, and capital. The three tenets of economic activity. Wherever you go in the world, where there's economic activity, there's land of some kind. Labor, humans, people, capital. What's another word for capital? You know, all kinds of little stuff you're gonna pick up along the way the next 7 weeks. Just like that. Another word for capital is money. Now, in certain places, we don't say it. For example, we go to lunch at Sabaros, we wouldn't say, I don't have any capital. We'll say, I don't have any money. But if you go into a business meeting with a group of investors, you'll hear, well, we need quite a bit of capital in order to make this investment work. So even though it's interchangeable, we use it differently at different times. Okay, just something to remember going forward. But essentially, capital has to do with money. You will see capital being used in other circumstances as well later. I'm not going to tie you guys up with that yet. Let's get past the fundamentals. All right. So there's a little diagram on that page as well, those of you who have a text. You see it? What is the description for that diagram?
Accounting is an information system.
Yeah, accounting as an information system, see, right here. And the information system looks something like this. I'm drawing it from memory, so if I egg it up, I'm not responsible. Is there another box going up? This way? Across, this way. There's a box on the top?
And the last one.
This way?
Yes.
Okay, another one this way. Okay, as you can see, I didn't pass art. Still drawing stick people. So imagine, I'm still drawing people like this. Remember back in that? So imagine when my 9-year-old pulled up a piece of paper and started drawing like this. Are they really my children? Because they didn't get it from where? Sure as hell not. Not from me. They got gotten it directly from above. All right. So in this information system, then, these arrows going from here to here, from here to here, information, just like people talking. I heard she hates people, and I heard she likes people, like information system. Going this way, and then back here, and then the cycle starts all over again. So in accounting, the information system is like a cycle. And we will see something later on called an accounting cycle. Don't worry about it yet. Cycle. To help us understand how accounting actually works in practice. But for now, let's look at the information system. What's in this box? Business activity, okay. Which we all familiar with. When we go to the mall, it's teeming with business activity. Yes, absolutely. When we go to, what's that name of the big theater again? Yeah, Fusion. Anybody been to Fusion lately? No, that's kind of young people that, not her. She's just, yep. Oh, I see. I'm not a John that look. You included with the young people? Yes. You guys don't go to Fusion? What kind of, you guys are not kids? No, I'm not talking about the playroom where people have kids.
And the dog. Oh, you know.
Yeah, she doesn't want to see children at all anymore. She's like, "Well, I don't want to see any more children. Huh? How many do you have?
One.
Only one? That doesn't count. My sister's only one. My brother's only one. My other sister's only one. I'm the only one with two. And they're like, that's one. I'm like, you guys are a joke. You don't know anything about grandchildren until you have what? Two or more. One counts?
Definitely.
Yeah, children keep you busy, keep you growing. All the time. But for those of us who don't want to see children when you go to Fusion, just run past the inside and go upstairs.
Don't go.
No, there's a section upstairs in Fusion for adults. Anybody ever been there? I don't blame you, because here's what happened. I made the mistake. Talk about business activity. Watch what I did. Last, whenever it was. They have a section upstairs where these chairs that go up, like put your feet up. And light in the corner. And all that crap. And each one of those seats costs $30. This me. I'm taking my spoiled wife to see what it's like. Big spoiled wife. She is spoiled, by the way. I call her a brat all the time. And then what she says, you spoil me. And guess what? She's right. I freaking spoiled her. Yeah, I admit it. Okay, so I'm on a test run. See, business activity. I'm on a test run with this thing up in Fusion upstairs. We kick this thick chair like this. And then the people come from the restaurant with a menu, this is all kind of exotic stuff on it. This is my wife. She never worries about what it costs. But somehow she thinks I always have what?
Money.
For the last, I wouldn't say how many decades. She always thinks I have what? I try to say. She's picking all kinds of stuff. I said, have you thought about the cost? Sweetheart, she said, oh, not really, I like them. And what I could have said was, shut it down. But no, this me. Okay. See? Continuing the bratish stuff, even at this late stage in the game. And so she does that and all that. So it's not an inexpensive thing. You have to be prepared to mess with that or have some resources sitting around. Okay. So now, after doing that, when she says, when are we going to Fusion again? I'm thinking about it because I know that when I go to Fusion, that's a what? Whatever it is, which is fine. It's really fine, but she's spoiled. And it's not cheap, and I can understand why people don't mess with that too often, unless you can mess with that, okay? Other than the children running around. All right, so that's business activity. Now, outside of the business activity, what happens in this box?
Measurement.
The management is in this box. And these are who?
Measurement.
Oh, the measurement. Now, what do you think we're measuring? Yeah, whatever's going on with this, absolutely. Buying, selling, exchanging, purchasing. We're measuring all these things to see what the dollar values are that's going around. That's what's going on. And then over here, what do we have?
Accounting, processing.
Processing, yes. Which means that after we measure, we then process. We pass the entries, we make a decision as to what to debit, what to credit, where do they go, which accounts are affected, etc. See? And then we come over to this box, which is communication. Once we put everything in the ledger accounts, posted everything correctly, then we communicate them by financial statements. So if we're communicating here, what's here? Yes. So what happens? Once the financial statements are done, the board of directors, the management of the firm, they look at the financial information. Did we make a profit this year? Did we suffer a loss? Did we spend too much money this year? Did we buy enough equipment? Are we paying too much in salaries? Do we have too many people on staff? All these decisions are made once these financial statements are prepared and they go up to the team for decision making. And then the cycle starts all over again. And we do this for as long as we can. And when this stops working, then you see something on the door called what? Starts to see, yeah, closed. Because something didn't work out in this cycle. All right. So that's basically how things work out there. Maybe you didn't see that in your mind before. Hopefully now it's, oh, that's what the hell we're doing every day. That's exactly what we're doing every day, at least from an accounting and business perspective. Okay? And it's nice to be able to put a face to what we do every day. So, having said that, let me say this. Everybody got that? Okay. Put 3 words over here. That should now be our second nature 1. Management. 2. Accounting. And 3. Communication. The watchwords of making this process work. Through management, through the accounting process, and through the communication process. Something to keep in mind. Okay. I have another question. Has anybody ever heard about management accounting? Probably not. Well, let me just say this. We have 2 basic forms of accounting that we talk about. One is called financial accounting. And the other one is called management accounting. And when you get around to reading the details, which I encourage you to do, please, when you get your textbook, don't say, well, we already discussed that and I'm not reading all that crap. Not crap, you know what I mean? Yes, you will. You're premeditating. I mean, why do you want to premeditate? You will. So, if at first you don't succeed. So if at first you don't succeed, and here you are. And so you have to go with it with a brand new vigor. There's nothing wrong with failure. In fact, failure is sometimes good. Helps us to grow, helps to keep us balanced like this. So don't worry about it. Just begin at the beginning. Doggone it. How old is your son? 19. Did he get to 19 by accident? No. How the hell you got into 19? That's my point. You were a little stinky thing. Start at the beginning and move forward. That's my point. All right. So what's the difference between financial accounting and management accounting? Financial accounting, you'll see, deals with the business activities and processes, etc., that go outside of the firm. And management accounting is information that is used inside the firm. So a certain type of financial information, like financial statements, are prepared under financial accounting for external use, and then certain types of information is prepared internally for management use. They are not necessarily the same. Okay, the structure and documentation for these 2 types of accounting are different because they serve different purposes. And we'll see later on. For now, all you need to know is that this information, financial information, is used for external users, and management accounting information is used for internal management purposes. Okay. That's the key, knowing that difference at this point. The rest will come together shortly. All right. So let's talk a little bit about accounting measurements. Accounting measurements. Remember, we looked at business activities. Now we're looking at the measurement side. What are we in fact measuring at all in the world of accounting? Everybody see that in the textbook? Anything on the measurements? Yeah. Anything on accounting measurements? Some very specific words under accounting measurements. Yes, that's one of them. Money measure, yes. And separate entity, let's look at those three, okay? Accounting, so we saw all that business activity thing. Now we're looking at the measurement side, okay? Accounting, measurements. And what are the components of accounting measurements again? Business what? Transactions, which we now know. We knew always, but now we're formalizing it. We know for sure now. Oh, that's the crap I'm gonna do. Gonna go to New York or Lowe's to buy stuff or Miami to whatever. Transactions. And the second one is money measure, yeah. And finally, separate entity. Now, we know what business transactions are, the buying and selling of business activity, whatever that might be. Money measure, on the other hand, refers to what? Anybody read ahead quickly to see what that was? Money measure refers to what?
Recording in terms of money.
Yeah, all of these, see, all notice the interrelationship already. Interrelationships. All of these transactions under the money measure are recorded in dollars and cents. Whether it's Bahamian dollars, Chinese dollars, Japanese dollars, African dollars, whatever, the yen, Canadian, Australian, whatever it is. All accounting transactions are recorded in dollars and cents, monetary structure, always. No exceptions, okay? And then finally, under accounting measurements, we have this very interesting concept here called separate entity. Now, what is that? What does your textbook say that is? Separate entity. I don't mind if you just read it. I don't care. I want you to read it. So first of all, your other colleagues can hear it, and then you can hear yourself, and then you remember stuff.
That's Monday, right?
Uh-huh.
Business and the owner needs to separate.
Yeah. Is that what your textbook says?
Um,
Let's see if that's what it says in essence. Separate entity. Somebody read the first sentence or two. What does it say?
For accounting purposes, a business organization is a separate entity, distinct not only from its creditors and customers, but also from its owners.
Very important concept. If any of you are not in business yet for yourself, one of these days you might get tired of working for somebody and say, what? I want to start my own business. And all of a sudden, this class that you hated this semester, you said, "That's a good thing. Now I still remember some stuff. And even though I need an accountant when he talks to me or she talks to me, I can understand some of what they're saying. But many business owners don't, by the way, because they never even thought about doing an accounting class because they didn't know that they needed to do one, nor did they care to do one. Never even knew that they'd want to go into business one day. Okay, so this separate entity concept is very important, that the business, with all its transactions and measurements, are separate from the owner. Most important. Others too, like creditors who are the lenders and others, but most especially separate from the owner. A lot of owners, for example, when they open a business, they only have one account. They put their personal money in it, and after all, what do they say? All of this is anyhow. You know, stinking accountant with no textbook telling me where to put my money. I'll put my money. You want me to fire you, but tell you, I'm in charge of this business. I hired you for advice, but I want you to tell me what I want to hear. Don't tell me stuff I don't want to hear. Business owners are like that too. You give them advice, they don't listen. They want to do what they feel like doing. And then when things start to collapse, They call you in the middle of the night wanting to wave a magic wand and fix everything. Doesn't work that way. Okay, so the business must always be separate from the owner. You should have a personal account for your personal stuff, a business account for your business stuff. Whatever you do personally should be over here. Whatever you do for the business should be over here. The two shall never embrace, even though people embrace them all the time. All the time. Some owners are so something about their business. I don't even want to call it a name yet. But for example, if they want to travel to Vegas to have fun, instead of using their own money, which they may have run out or they didn't use, what do? Sure, this is my company, mine. So they go into the till one day like this, close their eyes and just, or they just write a check against the account. And so, yeah, I'm going to Vegas and I'm taking out $5,000 because this is mine. Well, click an account and telling me what to do. And then sooner or later, he or she runs into what? Cash flow problems. There isn't enough money to pay salaries. The EC is not paid. The lights go off. The creditors who used to send you stuff stop sending you product because you're not paying them at the end of the month. See, separate entity concept. It is much more intense in practice than it is sitting in your textbook. And anybody who violates it, this principle sets themselves up. As I have seen for decades, from I was a young practitioner, telling folks not to commingle their funds. And even back then, they probably said, this young punk, I them to just do the accounting, he wants to tell me what to do with my money. All right. So said, so done. Accounting measurements, business transactions, money value, separate entity, crucial. If we violate or misunderstand any of these, we set ourselves back, whether we're individuals, whether we work for a firm, or whether we work for ourselves. Problem is, a lot of people who are in business, who work for themselves, work for firms, they don't have any idea about these things. So that we violate them all the time and not even realize what we do. Because we don't know. Which is one of the benefits of new and different information. It exposes you to things you've not seen before and gives a face to things that you do every day but didn't realize you were doing that. As you will see many times before these 7 weeks are done. All right, the other thing I think I mentioned last night were the 3 basic types of businesses. I think folks were able to say that, somebody, 3 basic business types. What are they again, for those who were not there Monday? Which is one, yeah, the sole proprietor, yes. The partnership and the corporation, yes. We said the sole proprietor is made up of how many people? Partners? 2 or more. Corporations? Many, yes, many. Do we know, does anybody know we call the owners of corporations? Shareholders, very good. Okay. Many shareholders. 2 or more partners. Notice we don't call them 2 shareholders of partnership. 2 or more partners. And you'll see this. I'm pointing at her so she could be inspired when you read the text. That she goes, oh, please read it. Do not take any shortcuts. Do not say you could leave out stuff because we already talked about it. I'm not reading it. Read it. There's no substitute for going through that process, I can show you. Or maybe I don't really know what I'm talking about, but don't gamble on it. Okay? So 2 more partners, many shareholders, and 1 owner. What's another name for owner under the soul? Starts with P. Anybody remember? Yeah, proprietor. Okay. All right. Take a good test question. By the way, for those of you who were not here on Monday, we talked about the examination. Does anyone remember what I said? For the sake of your colleagues? Can somebody update your colleagues who were not there on Monday? Let's see if you're all on the same page now.
Midterm, 40%.
Yeah, there's a midterm exam, 40%.
Fine.
Final exam, 40%. Attendance a yapping 10%. I forget now. Homework, 10%.
Participation attendance.
Yeah, participation together, we're 10%. The homework is a separate 10%. I will assign homework primarily for practice, because sometimes if you don't do it, students just, as I have in my head. That's terrible in accounting. You might be able to do that in another subject like bio or something. But accounting is more about practice than anything else. So every week I will assign you homework so you can go home and labor. I have other things to do, I know. Put something off for 7 weeks and labor until you're done. Because remember, once you're done, you are done. Okay. By going through the steps and being all miserable, that's how you learn the material, that's how you learn it better, and that's how you perform better in your examinations. And that's how you retain information long after the semester is done. So it's not really designed to make you miserable. It's designed to make you better at it. Okay? So when you're doing that homework, don't curse God and die or anything like that. Just say, this is for my benefit. When you get tired, stop, stretch, what next 15 minutes and go back. When you get tired, stop like that. And you'll be fine. But you have to practice the accounting so that you get a feel for it. So that when examination time rolls around, you're like, I should have done the homework. And if you attempt to do the homework, I'm not interested so much in whether you get 100% on the homework, but rather that you attempt it. That's what you will get credit for. And also, as I told the others, if you have questions from the homework, raise it when you come to class next time. That's the whole purpose. And if I spot some things and looking at them that I feel the students are not really getting, I'll make a note of that. When I come back, I'll reinforce the correct information. And so that's how we will let homework help us do this thing better as students. Okay. All right, fantastic. Okay. So then, now we come to a very important part of accounting that you have to remember going forward because it affects so much of what we do in the accounting process. And it's this, it's called the accounting equation. Everybody sees that in the text? Accounting equation. Yeah, like to hit pages turning as well. By the way, if anybody's textbook looks too new at the end of the 4th or 5th weeks, it means you're not serious. The textbook needs to look worn like this. I mean, you're searching for stuff. Yeah, like, yeah, back and forth. That's the deal. If you're not doing that, then you're getting a little spooked. Okay, some dog hair, stuff like that. Mark stuff. All right. What is the accounting equation, anyone? Assets. Yes. Equals liabilities plus owner's equity, OE. That's the fundamental equation for accounting. For example, if you have assets of $10,000, by the way, anybody knows what an asset is? Yeah. Everything, well, that's an example. Yeah. Cash is an example of an asset, but for simplicity purposes, for now, let me just say this. An asset is anything that a company, owns. A liability is anything that a company owes. Or individual, by the way. If you have a bank loan for a car, you have liabilities. If you owe somebody because you borrowed their ASU money, because you needed it dead, you have a liability. Then you don't have a stand in place. You see them, I have to run on. That's a liability too. And then, of course, owner's equity is an accounting, that's your personal investment in the company. Personal investment. Okay. Very important things to remember in accounting. They are very, what we call foundational, like ABC. For example, as simple as ABC is for us now, it wasn't simple when we were learning it. No, in fact, we don't remember when we learned it. I sure hell remember when I was teaching my children though, but they don't remember when they learned it. They just like all arrogant, like, oh, so the sophisticated situation concerning the erratic. I'm like, how, when did you learn all that? They don't know. That's foundational, that's what this is like. The ABCs of accounting, the same equation. And the sooner you understand and remember, the easier some things in accounting will be later on. And even when you go to do part 2, which some people say should, I say must. Okay? Whatever the reason is, don't do should, do must. You have to do whatever you plan to do in the future, you should do at least 2 levels. And if I'm alive and whatever in the future you see me, you know, so this is you were right. I'm happy I did that. I didn't want to. Stinky accounting. But I'm happy I did. All right. So please remember, learn it by heart if you have to until you get comfortable with it. So if you have $10,000 in assets, which equals, and you invest 4,000 of your own money, what are your liabilities? Let me see if you guys in your math class grade 7. What is it? How much?
You say the liabilities, right?
Mm-hmm.
What's the amount? Would it be 6,000?
Why 6?
You said if 10,000 in assets
Mm-hmm.
and 4,000 in owner's equity.
Mm-hmm. And you said pretty confidently 6. Doggone it. Why do you say 6? I know I made her sound think she was incorrect because I wanted to be sure why she said 6. She's right. Why is she right?
Yes, 10,000 minus 4,000 give you 6,000.
Absolutely. And remember, this equation must balance always on both sides. These two added together must always be that. That must always be these two added together. Boy, it is so fundamental. You'll see why later on. Why it's so crucial.
What happens when it don't balance?
Then somebody did something wrong in the accounting process that we talked about over here. Good question. It's to be an auditor one day. What happens if it doesn't balance? Because sometimes it doesn't balance. So whenever the equation doesn't balance, either somebody made one or more mistakes, or somebody is hanky-ing. However you spell. Messing around with the books. Better known in accounting as poking the books. See how much little crap you learn just by coming into a session? Poking. So you're not even in the semester yet. You go to work or something else, you hear somebody say, I plan to cook the books tomorrow because they don't know you know. Because you were sick. I just thank you. I just learned that last night. Dig onto teeth. Even though you haven't done much accounting yet, because of tonight, it's like, oh. Yes, cooking the books. In other words, we're putting information in the financial statement that is incorrect on purpose. See, a mistake is not on purpose. But when you cook the books, it's on purpose. You're planning to mess with numbers for one crooked reason or another. Folks are always trying that. That's why we have to have what coming every year, depending on the size of the company. Auditors, internal and because not everybody is honest and upright. All right. So remember the accounting equation. And the same questions she asked, if you're ever looking at it and it doesn't balance, you know you have a problem, Houston. And somebody needs to find out what the problem is. All right. I wish I could emphasize that accounting equation and its importance as much as I'd like, but we have to move on. You will see that many times in one form or another. All right. So having said that, then we can move on to the other bit of information that is also crucial. And this information is called, you saw it earlier, financial statements. On Monday, I think we may have alluded to 3 of them. Anybody remembers what they are? The income statement, slash P&L, profit and loss, mean the same thing.
Balance sheet.
The balance sheet, yes. And the third one we mentioned. Somebody mentioned that they blurted it out somewhere in the background. Cash flow. Cash flow statement. These are the 3 statements you'll see throughout this semester, throughout accounting 2, and throughout any accounting anybody is studying accounting 2. Because these are the communication tools. Remember that word over here some time ago? These are the communication tools. These are the tools that accountants use to communicate financial information. Cash flow. All 3 of these. So all the transactions for the year, buying, selling, buying, paying, expense, doing everything we do all year. At the end of the year, we close the books, we prepare financial statements, and these statements tell the tale in summary, communicate how well or how poorly the organization did. That's the beauty of accounting, taking a whole bunch of crap throughout the entire year and bringing it down to a common denominator called financial statements, so that we can see in a couple of pages what happened with all those thousands and thousands of transactions, depending on the size of the firm. That is why understanding these concepts early, all of them. In fact, chapter 1 is probably the most foundational course, and maybe chapter 2 that you'll do in accounting. If you know them well, the rest of accounting will be easier. I didn't say easy. Easy. If you don't understand them well and learn them well, you might still get through, but with a lot of pain and suffering. The solution, learn them. See, that's it. No magic at all. And if you do, you'll be fine. Do you have to make a commitment these next 7 weeks? Yes. Why? Because you don't have the normal 14 weeks. No. You have 7 weeks, like a cycle. Like a what course? Starts with C. Crash. Crash. Summer classes were great. You can get things done, but you always have to make a special commitment for those weeks because they're different from a normal semester. What am I telling you guys? Beginning this week, do not procrastinate. Do not put off reading. Do not. When we walk out of here tonight, what would have been gone? Absolutely. Textbooks coming, 1 week gone, and a weekend to catch up. These first 2 chapters. Doable? Yes. But be careful. There's a tendency to put it off and use the P word that my baby likes to do. And he knows it. And I tease him about it. He teases himself about it. What is the P word? Procrastinate. Unlike Dante, there's one fundamental difference between you and your father. You procrastinate far more. And I'm telling you up front, if you don't stop, it will cause you much pain before you finally decide to take your father's advice. Oh, damn. I have other stuff to do. I'm like, okay. Just remember, I told you for the 930th millionth time, for me was what? Like that. First time I told him procrastinate, he was like, that little boy, like, what the hell does that mean? Now he knows what it means, and still procrastinates. And he gets ready. Not everything, certain things. All right. So please, I keep talking about that because it is absolutely crucial. Now, let me say something about each of these three quickly. The income statement is made up of revenue or sales, expenses, and costs. And normally we will take expenses and costs away from revenue. And whatever's left, we say it's a what? Yeah, net. Well, don't worry, we're gonna get that crazy thing a little later. I wouldn't even say that word yet. The ones that cost. For now, it's just revenue minus expenses equals net profit or loss. If your expenses are less than your revenue, do you have a profit or loss?
Profit.
Yes. Your revenues less than your expenses, what do you have? A loss. Similarly, if your monthly salary is $1,500 and you're spending 18, you have a negative what? 300. So where do you get the 300 from to make up the 18 you spent? Well, excuse me? We do all kinds of crazy stuff. And this, it's cracking up over here, like, crazy that happens. Businesses do it all the time. For one reason or another, not just individual. So where do we get the extra three that we don't make? We didn't make that. We either have a second job, we bury it, as we say in Bahamianese, we bury it. Or we, that loan payment, we leave it until the next month or something like that. Okay. But typically, that's the problem when our expenses end up being what? Greater than our income, whether it's an individual like yourself or a business. The balance sheet, on the other hand, is made up of these three components. Remember them? Yeah, already. Those are your balance sheet components or elements. See, you'll see soon your balance sheet looks like this. Assets over here, liabilities over here, equity over here. Total. See, 10,000, 10,000. That's a balance sheet. No matter how sophisticated a company gets, it always looks like that. We just add more stuff depending on what? The nature of the business. But it doesn't change. See? It's just like people having sex changes. Sex changes doesn't change who you were born. Huh? If you're biologically a boy, no matter what you do, you could. You still are. You change gods, you could do it. Even let's think about our equation. Let's call it common biological sense. How's that? For those of us in one God, stinky God. Let's talk about it then from an academic perspective. You know, our worldly arrogance. Even from that perspective, it's madness, biologically speaking. And then let's take it lower, common sense. You know, like people, please, let's not go lower than common sense. Nothing against people. I don't care who they are. Nothing at all. However, that crazy stuff doesn't change anything. It's the same thing. No matter what size this company becomes, the balance sheet will always be the what? balance sheet. That's the beauty of accounting. No matter how big the company gets or how diverse it becomes, the accounting equation, what? Never. Oh, we're a big oil conglomerate now, we can change it? No. Well, you could change it, but you will not be conforming to generally accepted accounting principles, and you will never succeed in audit. That's my share. Okay. I just somebody thought my sheriff one time, like, why do you call your wife the sheriff? She's what? Yeah. And wives have a way, like if they're displeased, of locking you up without even putting handcuffs on you. You just feel locked up. I didn't do anything, but I feel trapped. Like, oh. And then when they're ready, they release the invisible that you never even had on. And then all of a sudden the home is fine again. And everybody's like, yeah, let's go to fusion. Oh, anybody in your married? One, two. Okay. We're the only three sufferers. I'm just kidding. Don't let it tell it. It's a beautiful thing, you guys, when time comes. Do your due diligence and then run into it. Don't run first. One of the accounting issues, accounting is attached to everything. There's a cost. And whenever there's a cost, that means it's what? Monetary, correct? And anything monetary can then be what? Accounted for. By my mind. So, marrying the wrong person, it may start with a person, but it will end up with something what? Monetary. One way? Oh. So, no matter what type of business this baby holds. And then what about this statement here? Another crucial statement that you should, even if you're not preparing it, working with it, it is absolutely crucial as an accounting student, a business person, an individual, whatever it is, to know what it is and why. For example, the cash flow statement, as it says, only deals with cash transactions, nothing else. Cash coming in, cash going out. Now, why do I say that? I say that because not all transactions in business are true or false. Can you give me a transaction in business that's not involved cash? Anyone? POS? Yeah. When you use your credit card, for example, what are you actually doing? What are you actually doing? Are you getting credit when you use your credit card? Like, it's not a bank loan, but are you getting credit when you use your credit card? Yeah, because you're getting a product now and you pay when? Later, which are the tenants of a loan. And that has a name called credit. Absolutely. If somebody comes into your store and says, I don't have any money, but since you're my friend, I want you to sell it to me on credit, and I'll pay you later. No date. That's already spooky. Only your friends and family can put you in that mess. Child, I'll pay you later. So as I have some extra, which made you know you're going to be paid when? Never. Says they're your relatives and your best BFF. All of a sudden, you have so many BFFs, all of a sudden, your accounts receivable go, your sales are, you sell that month, $7,000, and your accounts receivable is 7,000. How much cash do you have? None. N-U-N. N-U-N. None. Zero cash. But you sold everything. That's why sometimes when you walk past a business, you see C-L-O. owe. Because they have trouble getting this money back. Because once people get stuff on credit, unless they like have a good character, people don't want to pay. Sometimes they have the money, they walk, I got it, yeah. And right in their pocket or purse. They just don't want to pay. Here's your money. You were so kind enough. Here. No. They're keeping my money in my place. I'll pay them next time. After all, we grew up together in the same yard. Or whatever we come up with. We went to university, UB together. We went to the same Baptist church with Reverend Tingham. I don't need to pay you your money. You were kind enough to lend me. And I don't want you to harass me either. Because I'm gonna get mad and stop. Yes, they do. So, yeah, they do. Sadly, not everyone. But we have a little shine with them. So cash flow deals with cash coming in only, cash going out. Now, when we get to the cash flow statement, you will see later, well, I'll tell you now, but you'll see the details later. A cash flow statement has three, like how we have components for P&L, components for the balance sheet, the elements for the cash flow statement. One, can somebody say, you saw it again, cash from? Whoever's following in the text, cash from? Go hunting for the cash flow statement information. Then you'll see three categories of cash flows. Let me see if folks can go to the business and pick it up. Cash flow from? Operating activities. Yes, day to day. Cash flow from? Investments or investing activity. Cash flow from? Financial activity. So this cash is coming in from the cash flow statement is from the day-to-day buying and selling of goods and services, or you have made an investment and now you're getting what? Dividends or interest coming in from money you put on a fixed deposit somewhere in the company. That's the investing side. And then the financing side is borrowing. How do you get cash coming in from borrowing, anyone? Because when you think about borrowing, you think about what? Paying it back. How do you get cash inflow from borrowing? Told you we're doing all kinds of crazy stuff that's not even related. How do you get cash inflow from borrowing? Well, has anybody ever borrowed money before from the bank? Okay, let's say for a car or vacation. When you get your loan, do they give you any money? Says no. Yes, they do. Oh, I know, because when we think of borrowing, we think about what? The payback side. But there's a gracious side to it before payback side. It's called receiving the cash you borrow to do whatever you intended to do. So if you're going to Israel that year for 5,000, they'll give you the 5,000 happily, shake hands, everybody smile. As long as you remember that come the beginning of the next month, you have payments to make. So cash flow from financing has an inflow of cash and also an outflow. What's the outflow? You said it earlier, Samantha. When it's time to pay it back. But we already said some people pay it back and others don't. They finance their affairs with your money by not paying you back. You know that somebody owes you money or owes a bank money, they don't pay. What is happening is they're getting cash flow from not paying you. True or false? Absolutely. Because if they don't pay you, they get to keep your money. That's the what? Inflow. Yeah. See how that works? But in practice, unless we're exposed to that concept, we wouldn't think about it that way. Now, you get to think about it that way. So if anybody owes you money as at this afternoon, you can text them now during class and say, I just want you to know that I'm now aware that the money you're not paying me is actually an inflow of cash for you, Suzanne, and an outflow of cash for. In other words, pay me my, just in case. They don't get it. 'Cause they might not get it, that's the truth, they might text you back, say, what do you mean?
Yeah.
See my point? Yeah, some people play like they don't understand, others really don't, you just have to figure out the difference. All right. So these are the components then of these communication tools in accounting. Everything that I've said and we've discussed tonight is absolutely foundational. The ABCs of accounting. Once you put these in the perspective, learn them, understand them, know them, things will be easier to manage. Notice I didn't say easy. I said easy. Okay, just like anything that's new, you have to get accustomed to it, comfortable with it, practice it, learn it. And then after a while, a lot of it will just be second nature. That's what the learning thing is all about. And accounting is no different. All right. Other stuff in accounting. And that's so important over there. Let me come over here. In accounting, we have this interesting word, acronym, we call it. Anybody knows an acronym is? Acronym. By the way, you are free to use Google on your phone in this class. You don't have to say, well, this is not an English class, I'm not looking up any. I don't care. I want you to do it. That's why every now and then I'll throw out something weird. Just to change the thing from debits and credits, stinky debits and credits. And I say stinky, I don't mean they're not important. They just get like everything else tedious after doing it. Acronym.
Oh,
Tanisha?
Sandy. An abbreviation form from the initial letters of other words.
Yeah,
Pronouncements of words.
the abbreviated form of a group of words. See? So now, when you hear somebody speaking about acronyms, it'll be like cooking the books, like, oh. I hope you guys will hear cooking the books anytime soon. Please. That's a dirty word in accounting. That's a nasty word in accounting. That is a curse word. Cooking the books. There's nothing flattering about it at all. All right. So the acronym then, you guys are going to be introduced to for the first time is called GAP. Anybody sees that in the text? I hope so, because it's sitting there. Nobody's seen it yet? Yeah. Yeah. What does it mean? Yes. Generally accepted accounting principles. Now, in accounting, as you'll see as you go forward in the semester, that there are certain accounting principles that we abide by and we can change no matter what. Somebody puts a gun to your head, tell them pull the trigger, that's not going to change anything because it's a principle. Okay, and we have some gap principles that you'll see along the way. This equation is a principle that never changes. Assets must always equal. Not if you feel like it, somebody in the mood, it's a different language, a different culture, doesn't matter. Under GAAP, assets must always equal liabilities plus equity. It's another name for equity, capital, just in case you see it. Okay. We use equity for sole proprietorships. We use capital for partnerships. And we use another special word, corporations. Anybody knows what it is? It's something equity. Probably not. Shareholders, equity. These are absolutely important little things to know. You don't have to be an accountant to appreciate their value. You can just be working in a firm somewhere. You're going to get promoted one someday to some other thing, and you're going to hear this crappy stuff. Not crappy, you know what I mean? sooner or later in your professional or personal life. And by George is always a nice thing to at least be familiar with it. Or to at least say, I heard that somewhere, let me Google it and refresh. Because, oh, that's what the hell they were talking about. I'll be ready for the next meeting. All right, so this acronym GAP, Generally Accepted Accounting Principles. There are a couple of bodies that are responsible for creating these principles. Can somebody tell us some of them? Couple of accounting bodies.
Ernest and Young,
Oh,
Casa Gemina.
not the firm. The
Okay.
firm actually, Ernst and Young, they're the ones who are being guided by these principles, by GAP. And whenever they don't follow the rules, they run into trouble. Exactly. So I'm glad you mentioned Ernst and Young. Ernst and Young ran into trouble the other day by not conducting certain audits according to what generally accepted auditing principle. And they had to pay a big time fine, millions of dollars for violating the auditing principles. Actually mentioned that bloody firm. They're not the only ones. All of the big firms and smaller firms have found themselves wanting in recent years by violating the rules. That's a whole other issue we'll see later. Ethics. Cooking the books is considered ethical or unethical? Unethical. And sometimes depending on the nature and level of cooking, it could be criminal. From unethical all the way down to criminal. Sick. So generally accepted accounting principles. One of the bodies that they tell us that create these principles is called the
Financial Accounting Standards. Board.
Yeah, Financial Accounting Standards Board, another acronym. These guys and girls get together and they said, okay, these principles have been around for a long time. Is there anything we need to improve upon, change, take out, omit, add to? FASB. Any other board?
International.
International Accounting Standards Board. Another acronym. Any others? Any others?
International Financial Reporting Standards.
Say it again.
International Financial Reporting Standards.
International Financial Reporting Standards, IFRS, very popular, yes. Did they stop there? Other. Yeah, like other influences?
Company Accounting Oversight Board.
Yeah, public
Company Accounting.
Accounting Oversight Board, PCAOB, yes. These are the guys who oversee auditing firms, like Ernst & Young, like Deloitte & Touche, and the rest of the big four are not so big. Okay, PCAOB, any other influences? Yeah, American Institute of Certified Public Accountants. This is the professional body in the US that license American accountants after they pass the CPA examinations, so they can go on to give tax advice and conduct audits. Any others?
Securities and Exchange Commission.
Yeah, FCC. We have one of these in the Bahamas. This is US. What is our local security thing called? Anybody knows?
Securities Commission.
Yeah, FC.
I can't-
That's close. Commission of the Bahamas, yes, absolutely. Good, SCB. Yeah. Any other influences?
Would Central Bank fall underneath that?
Regulators, yes. Well, the SCB is a regulator, central bank is definitely an influencer. CBOB. All of these groups are part of looking after GAAP requirements. For example, in the Bahamas, the Securities Commission is responsible for supervising and regulating the securities markets, buying and selling of shares and stocks and bonds and all that stuff. Hedge funds, etc. Virtual currency, God forbid. So any company that is licensed in the Bahamas by the SCB, every year they have to produce, among other reports, an audited financial statement. by one of the firms. The financial statements will not be successfully audited unless the firm is following GAAP. And regulators and others want to make sure that when an audited financial statement is done, it's done independently to make sure that the rules are being conducted. Because human nature being what it is, when we are not being checked or watched, sometimes we have a tendency to stray, I guess. Or worse. And white collar crime is one of the leading sources of crime worldwide. You know that, right? White collar crime. What is white collar crime? Is it crime conducted only by white people? What is white collar crime?
I can't remember.
Anybody remembers what it is? It's criminal activity that occurs high up within the business organization. In other words, if you steal a loaf of bread, that's petty crime. If you rob a bank, that's bank robbery. If you shoot somebody in the head, that's murder. White collar crime is when executives at the top and board of directors, members at the top, plan and scheme to get money out of the firm illegally. Okay? Or when they tell customers, if you invest in my company, I will give you returns that no bank or credit union and can give you. So you invest your money in their firm and they run off with it and you never see your money again. That is white collar crime. They just didn't call it white. Why didn't they call it black collar crime? We call it Black Friday, cat and stuff, but we don't call it black collar crime. Is it because it is such a sophisticated level of criminal activity that we decide to give it the sophisticated label, quote unquote, white white as snow, dark as the dark, man. So that's what GAAP is all about. Generally accept anybody who's practicing accounting, from a bookkeeper all the way up to an auditor, must be in conformance with GAAP. Period. That is as fundamental as, because this equation, for example, is governed by GAAP. Everything in accounting is governed by GAAP because they are principles. Principles don't change. It's a good principle not to lie. That principle never changes. It's always a good principle not to lie. Not that we don't get it, but that's what principles are all about. And that's why we refer to them as accounting principles, because they're expected to be adhered to where? Anywhere in the world where anybody touches any form of accounting activity at any level. That's why you can't just walk in somewhere and start doing stuff. In accounting, you could do it, but a lot of people are practicing the bookkeeping stuff that somebody told them, but they don't even understand what they're doing or why. Which is why a lot of times you have a lot of structural damage being done. People are making mistakes because they don't understand the principles behind what they do. Okay, very, very important stuff. All right. Man, this chapter number 1 is so foundational, it's ridiculous. For sure. What about users? Let's get down to the end of the chapter. Users of financial information. Let's look at them. By the way, for you guys who've been making notes, yeah, you'll see this stuff in one form or another in your text, but don't throw those notes away because they have pretty much summarized a whole lot of stuff that you're going to read. So keep them as a point of reference, as a final source of review, stuff like that. Especially for the first exam. By the way, if we have 2 classes a week for 7 weeks, that means we have 14 sessions. Just like that. Which means that your first or your midterm exam is going to be week number 7. Please make a note. What date is week number 7 from today? Today is week number 1. Which day is week number 7? Of which one? June the 14th. Are we in agreement? Somebody said,
Oh.
The 21st. Yeah.
stop it.
21st.
21st?
Wait.
21st. Somebody said, wait again.
21st, I thought that was
Yeah,
Oh, boys.
question?
Questions on.
Oh, okay. So somebody still stuck in. No. Do you have the ticket yet?
No.
I'm just teasing. If, yeah, if it's a trip that you have to take, because if you don't take it, it's gonna create all kind of havoc in your life, then I would say, we can discuss it if it requires that. But if it's a trip that you can do after that time, then I wouldn't put myself through it if I were you. I just do my thing, and then after the exam, then you go and have fun. Yeah. Yeah, next day. Okay, so you don't have to be worrying about, oh my God, when I come from this trip, I have to go and do that stinking accounting exam. So yeah, get that out of the way and then go off and. All right.
June 21st will be the final exam.
June was trying to be the final.
Yeah. Because this course is only 7 weeks, right?
See, now she is analyzing it. Now, when I say week number 7, do I really mean week number 7? Why? She's analyzing and she says, oh, hold it. I know. But do I really mean week number 7? How could I mean, how many weeks we have altogether? So I don't really mean week number 7, do I? I know. Be like you, biggity. Say what you mean? Me. Actually, what I do mean is session 7. What date is that? Changes the prospective, yes. What made you think of that, Mona? Yeah, she said, man, I was trying to figure it out while y'all talking about trip. I was trying to figure out how that could work. 29th of May. Holiday? What holiday is that?
Maybe we'll do it after the holiday. Or before the holiday, after the holiday, or before. No.
Maybe you could do it the Wednesday before or Wednesday after.
Man, life stinks.
Before, because we can eat done mine on the holiday. So let's do our first exam. Try to figure out.
June 1st. So
Oh, that's
24th.
that thing. May the 29th.
No, that's a holiday.
I know. I'm just putting here saying this is horrible. Holiday. That's a Wednesday?
That's a Monday.
So yeah, we can't do it on that Monday anyway. Because examination is gonna be done here. Remember, Monday is what? Virtual. So you guys are gonna have that Monday off.
So it'll be the 31st.
So it'll be, yeah, it'll be May the 31st. So now you have time to study.
That's right.
Yes. My. Life is always so full of some twist or turn. I know, but stay. So that's session number 7. Session number 14 will be when? June 25th? Which day is that? Wednesday, correct. June 21st? Wednesday. So that's our tentative schedule, unless something extraordinary happens. Maybe I should write it down while I remember. Because when I'm done, I'll probably walk out Okay. Session 7. May 31. Monday, 29th, holiday. Great time for you to be studying. Sorry? The other holiday is not on a Monday or Wednesday. Great. That way we don't have to extend the semester or change our program. All right, and then session number 14 is June the 21st. Fantastic. All right. So what's next in chapter 1? Almost where we want to be. The users. After all this chit chat about GAAP and all the stuff that accountants and bookkeepers consider, who are the users of financial information? Anybody see that yet? Who are the users?
Management.
Management. Who else? Investors. Who?
Shareholders.
Yeah, shareholders, of course. Who are the owners? Who else? Believe it or not, there are other people interested. Whole gang of people. What about creditors? Who are they? Of course, without lenders, dog eat your lunch. Most companies cannot survive without the ability to borrow. As is with many individuals. Imagine if we couldn't borrow, we have to pay everything cash. Oh my God. Thank God for the person who created borrowing. Imagine what a problem we would have. Yet some people still say, don't borrow. It's a devilish thing. Save your money and buy it cash. Save what money? Yeah, go on an ACE. Yeah, take a chance with an ASU. And then when ASU people start realizing that, boy, then they start committing what kind of crime? Yeah, ASU crime. Do we have ASU? Do we have ASU crime?
All done.
Oh, all the time. Yeah, it's a very tempting thing to be collecting all that money every week and just be honest about it. Sorry?
It's been marred after people is money, you know.
Yeah.
Okay.
Fascinating. And the reason for that is this thing here, this animal is called money. The strange bad fellow. It'll change even the nicest, sweetest of people. If in money show up and egg everything up. Have a nice relationship, then money shows up. Somebody start making more money than the next one. So they start kicking the other one, make that, shut up, I make more. I'm in charge of flicking like that. And then all of a sudden, sweet relationship becomes all messed up. Somebody started fighting, he like Tom Sawyer, like this, I can't take whatever. Because though, absolutely. I was teasing my wife the other day. I said, remember when we were like just starting in our apartment? She said, yeah, I remember why. Be careful, because sometimes those things get better with this component here. Man, we start getting, like my grandma used to say, it's a Bahamian word. Anybody knows? The Bahamian word. Say it again. Worse than that. Her word was, you get what's up. Anybody knows what what's up means?
Spell it for me.
Well, that's the result. Where does the word what's up come from? Anybody knows? It comes from the English word worse. But the old people, they don't think about standard bloody English. They have their own English. What's up? Don't ask me to spell it. Spell it any way you want. Money. Okay. So yeah, all these people are interested in what this. What about employees? Aren't you guys interested? And what's happening with your? Interestingly enough, no. A lot of employees just go to work and like the salary, don't care about no financial statements from the firm. The firm is audited every year, they don't ask to see the financials. And if you ask, people start looking at you funny. Why you want to know? Well, why the hell this, then they start going into the room, senior people. Junior people asking, it's like this, you can get rid of them, man. They're asking about. Who paid for that accounting class? That don't pay for any more. Because now they're getting what? Inquisitive. When they were ignorant, they didn't ask us anything. Now they did one accounting class. That we, the lecturer, and they start picking on me even. I know it's strange, but you'll be surprised. See? Money, anything can lead to it. The strange bad fellow. So yeah, employees are interested in financial statement too. Unions, how about them? They want to know when to have the next strike. Oh, so you made all that money. And the top echelons get all the money. And now you're telling us you're not any money in this firm? We go strike. Well, I think it's well go either. So a whole lot of people are interested in financial statements, whether you realize it or not, from where you are at the moment. Okay? For sure. And one day when you guys move, maybe not even that far anymore, after you finish this semester, you'll be like, wait a minute, my eyes are open a little. Then you start asking questions. You start looking at things a little differently. Lunchtime, instead of hanging out, the boss will pass you reading the company's last annual. We have created a monster. Hell, she doing on her lunch hour with her leg crossed like this, reading the financial statements of the company she works for. For some people, that's criminal. How dare you be so informed? Next thing you know, I hope that's not the case. But stranger things have happened. All right. And then finally, in this chapter, there are two other words I want you to bear in mind when you get your reading down. The two main reasons why we are in business. Anybody sees it yet? Almost to the end? Not to the end, but getting to the end. One is for profitability purposes, to make a profit. If you're not in business to make a profit, then you are a charity and you're not interested in a profit. But if you are not a charity, then you are into business for making a profit. And when you start making a profit, typically what should you do? Close. And if you don't close, circumstances will close you. Eventually, if you continue to be what? Unprofitable. Okay. Remember, losses occur when our expenses are continuously greater than our revenue. So be careful if you're in business or going into business, that is key, profitability. And the other important thing in business that we violate all the time, or don't even understand, is called liquidity. Making sure you have enough money in your firm to pay your bills every week, every month, every year. Sounds like a Luther Randolph song. Liquidity. Company or individual. What sense is it to be working and you get a flat tire, you can't change the tire for $5.50 or $20 or something? I'm not, people have all kinds of stuff going on, health issues from time to time. That's not what I mean. But you have to be thinking about a certain level of liquidity so that when stuff kick in, you could do some things without like going under like, a lot of business owners take money out of the company without even considering its impact on liquidity. That eventually, if they keep doing it, they're not going to have enough money to pay the bills. That eventually, if you stop paying your bills, soon everything will collapse. Okay, as simple as that. All right, so that's it for chapter 1. I wouldn't say that anything in chapter 1 is to be taken lightly. Nothing in chapter 1 is to be taken lightly. They are the ABCs of accounting. If you don't learn your alphabet, you will never read or write. We all know that. you don't learn these basic principles and understand them, you will struggle going forward. Okay, so please, when you make your notes, when you read up on this stuff, try to understand. And again, don't worry if you don't get everything overnight. This is not an overnight affair. Okay, studying accounting principle is not a flame. I guarantee you that. Anybody who's interested in accounting for a flame, don't eat your lunch. I know that thing. It's a process, and once you go through that, you'll be fine. All right, any questions before we move on? Oh, homework. I promise you get homework every week. The number is not designed to torture you. It's really just to help you practice. If you get stuck in the middle of a homework during the week, any homework that's given like this week will be due on Monday. So you have every weekend to catch up and get it done if you do not get to it during the week. Please don't leave your homework for the night before or the next day lunchtime before class that night. That's going to be, to speak for yourself, other things to do. But try not to do that. Even if you do a little each day, that will be better. Break it down into pieces, read it, okay, and you have to answer 3 or 4 questions or whatever, and you do some each day. So by the time Sunday afternoon rolls around, you're coming to the end of that madness without major and eternal stress. Because remember, if you leave until the last minute, what might happen? The light might go off that night. Then the next day you get up, the car is stolen. And the taxi you take, the Uber you call to go to work, abducts you and takes you. What am I saying? Crap happens. Don't leave it for the last minute. All right, homework. Page 78. Not that one. That's the other one for next, up to the other chapter. Homework from the first chapter, page 31. Page 31. Question P4. P as in Peter, 4. Now, let me just say this. Well, I won't say that because I won't ask you to even attempt to be on your textbook. You need it. Okay. I am hoping that you get your textbooks tomorrow or Friday latest. I would suggest that if you don't get your textbook by lunchtime on Friday, you bombard Mrs. Jane and say, I need you to send me copies of chapters 1 and 2. So I can catch up on my reading this weekend and do my homework this weekend. That's in the worst case scenario that you do not get your textbook by Friday lunchtime. Then you have to become proactive. Come, but I wouldn't even say call, visit. And say, I'm here to collect, since I didn't get my textbook yet, I'm here to collect copies of chapters 1 and 2. And then somebody might say, well, we're a little busy now, can you come back? I said, I'm afraid not. I can't come back. And I need it for my homework and my reading. This is what man of students that's pretty insistent, isn't it? Okay, but that's what you have to do. Okay, hopefully you won't have to do that. Hopefully the textbook will come in, you just purchase it and be on your way and do what you have to do. All right. So now we go into chapter 2. Chapter 2. What's the topic of chapter 2?
Analyzing and recording business transactions.
Yeah. Now we've already done all that foundational stuff. Talked about GAAP. Talked about the different types of financial statements and their elements. Talked about the accounting equation. talk about the account, the business cycle, all that important stuff. That stuff is, man, I wish I can overemphasize how foundationally important it is. By the way, I think I may have mentioned it on Monday. Please, you can raise questions in my class anytime, whether it's virtual or real. Anytime you feel like it, at any point in the discussion, do not be bashful. Just say, oh, by the way, what does that mean? I didn't really understand that. What's an acronym again? Whatever it is. Okay, feel free to do it. Just remember, you might even get a little credit just for yapping. How's that? Credit for yapping. So please feel free. Chapter 2, what's the topic again?
Analyzing and recording business transactions.
Yes, analyzing and recording business transactions. Wow. In other words, before we can record any transaction in accounting, we have to do what? Analyze it, break it down, ask ourselves, what type of transaction is that? What do we debit? What do we credit? Then, when we've sorted all of that out, then we can go ahead and record. When we are analyzing, the work is done in our heads. When we are recording, it goes down into a document called electronically or not, something called a journal. So whenever we record a transaction, we record it and we call a journal or a general journal. In some instances, that's the correct word. But we use the short version, the journal. In our journal, we record our debits. Yes. And our credits. The debits are always to the left side of the journal, whether it's a manual journal or electronic. And the credits are always to the right. If it's manual, this is what it will look like. If it's electronic, you just type crap in and the machine will put it where it needs to go. Like QuickBooks and such. Okay? But typically, this is what it will look like. Whatever the output is, you'll see that the debits will look like this, like it's to the left side for $300, and the credits will look like it's on the right side, like this for $300. That's how it should look. Sometimes both of them might be here, but at the end of the day, these two amounts should always be the same. This in chapter 2 is what we refer to as double entry bookkeeping. Why? Because double is? What's double? 2. Absolutely. By the way, Bree, is your daughter walking yet? This might put the worst is coming. It's creepy. Enjoy it, because when she starts walking, I'll beat your line. Now, let me just say this in front of the public. If during the next 7 weeks you grow tired of her, you don't want her anymore, send me a text so I could draw up the relevant legal documents. Because once I take her, I don't want to see you or Tingham messing with me after I have invested what? 1 minute of financial, especially emotional energy, and that little angel. See my point? Doggone an angel. My sons asked me the other day, Daddy, are you ready to be a grandfather this week? Not really, but deep down, what do you think my answer is? I'm right. And don't bring me no grand boy right away, because I already dealt with you people. I want you to bring me one up. Yeah, so I can, it's here,
What?
disappear to the mall, just me and her. go, instead of taking my wife, I'll take her to what? Fusion. And we'll be up in the thing. So, yeah, they need to wait, because I don't need to be tied up yet anyway. With no little angel. All right,
What are they?
my sons. Little Sam is 32. Samuel Jr. I don't know what the hell they're waiting for. My baby is 26.
Does he have a 9-year-old?
I wish.
What?
No. 9, man, if I had a 9-year-old, I wouldn't be here. I'll just leave reading material, be gone.
So who would I? Fascinating.
That was another example. But I'll tell you something about this. Here's what happens. Watch how interesting life is. I have a godson. Godson. Who I stood over when he was christened 34 years ago. His father died a long time ago when he was a boy. And so I was like a what? Surrogate dad, even though I was his godfather. Okay. Interestingly enough, at some point in time, he stopped calling me godfather and started calling me father or dad. I'm like, oh, God, I'm tied up again. Now here's the problem with this guy. He lives in Toronto too. Everybody's gone. He gone, little sound gone down. He lives in Toronto. He's married with his wife. But here's the problem. They have 2 daughters, 1 and 2. Not a second. So I'm just waiting in the shade now for them to get to the age where their parents feel comfortable letting them go. They'll get, you know, kind of way? They're very finicky parents. When they get like a little bit older, I'll be sneaking into Toronto and looking, running off somewhere with them for a while. When they're looking for us, we'll be gone. Or when they come home, so you 2 people go somewhere we're going to the fusion. So this is, I was thinking that's what I thought it was gonna be. 2 little chicks and they 2 more, 2 more to come maybe. Oh my God. Okay. So when you see a journal entry, it should have a debit in it, it should have a credit, the amount should be the same. If they're not, somebody did something wrong or somebody's up to, no good. Yeah, cooking, just a cooking math. Cooking up to no good. Cooking anything except pea soup and dumpling or something, it means no good. Cooking and accounting is never good. I don't care what somebody said, well, we just report them. That cooking is never good in accounting. Cooking is good at grandma's house, mom's house, like that, but not accounting. Okay, for sure. So every transaction, big or small, must be recorded in the journal, must. If you leave out anything, the financial statements will be inaccurate. I think you gathered that already. If you buy a pin for 10 cents, you have to record it. Okay? Purchase pin, 10 cents, credit cash, petty cash or whatever, 10 cents. Every transaction. You cannot decide, well, this is still such a small amount, I'm recording it. I don't feel like recording the Delta to this transaction. You can't do that crap. Well, people do crap, but under GAAP, you should not do it. And that's what this is all about, analyzing and reporting transactions. Now, what does chapter 2 open up with? Not the first page. Yeah, flip the page. Business transactions? What do they say about it?
Economic event that should be recorded in the accounting records.
Okay, and what do economic events refer to? Any business transactions, buying and selling of goods and services. Those are economic events. An economist will tell you that is an economic event. Economist talks about the conceptual side of it. Accountants do what? We record it. We bring it down to what? A monetary, see that word? A monetary standard, and then, which is money, and then we record it. So while economists are saying, well, the demand for meth is going up, and we need to do something about the supply side of things. So are they talking about that stuff? Accountants are saying what we can convert to dollars and cents and record it. So that we can have a conversation about the what? Monetary effect of what's going on in the business world. All right. So you see that little diagram they give you there. It has some steps. What are those steps? Uh-huh. Yeah. Uh-huh. Okay.
Business transactions that affect financial position.
Interesting. And believe it or not, that little table leads into the discussion about how to record transactions. All right, let's do it again. What's the first one? Economic events, okay. Uh-huh.
Recognition,
Recognition, yes.
valuation,
Valuations, yes.
classification,
Classifications.
business transactions that affect financial position.
Indeed, business transactions. Financial position. What is financial position? Income statement, balance sheet, cash flow statement. All right, now all of these steps have to be taken into account for us to understand what happens next in terms of the reporting. But these steps are actually related to the analytical process, the analysis side. These steps will help us understand how to analyze accounting transactions. And then once we understand how to analyze them, then we can actually go into how to post transactions. So under economic events, do they say anything later on? I hear papers turning, that's what I want to hear. Under economic events, any discussion? No? We already know what it is, but I was just wondering if you were wondering if there's any further discussion. We know, we just said what an economic event is. What about this one? What is that? Again? What does the text say about recognition?
And, then to record a business transaction.
Yes. In accounting, when we record a business transaction is actually crucial. We cannot record a transaction that might occur. Will occur tomorrow. Will occur, yes. See, we have to record a transaction when it actually happens. Absolutely. That's what the recognition principle is about. I had a dream. No. Accountants record on the dreams. We're doing it tomorrow, but record it today. We don't do that. Hell no. I'm the boss. Record it. You like, did it happen, sir? Not yet, but it will. But I'm the boss. Record something for 3,000. You can't do that. Recognition says you record it when it occurs, period. So now we have the business activity. We know when we should record. What's the next one? Valuation. What does the text say about that?
Business transactions and the resulting assets and liabilities.
Which we are now aware. In other words, we already know that everything in accounting must be brought down to a what? Dollars and cents. If it's cash, that's automatic. If you have a piece of equipment, you cannot record the equipment in the books without giving it a what? Value. If you borrow money from the bank, you cannot record the liability in your books without giving it a value. If you invested money, you cannot record it as an investment on the equity unless you convert it to dollars and cents. That's why we don't say I invested 3 cows. You own the cows, but we don't say I invested 3 cows. what we do is we come up with a valuation for the cows, don't we? These fatted cows are worth like that. $15,000. And that is what we record. We don't call it like, you don't see any financial statement with 3 fatted cows. For sure. That's what we mean by monetary valuation, dollars and cents. What's the next step in the analytical process?
Classification.
Classification. I wonder what that means. What does it say?
The process of assigning all the transaction in which a business engages to appropriate categories of accounts.
In other words, all assets should go under, should be classified as assets, whatever it is, cash, accounts receivable, inventory, equipment, prepayments, whatever they are. Land and so on. These are all assets, stuff the company owns. That's what remember I told you. Make sure you're clear on what assets are, liabilities are, and equity, because they keep coming up. They keep coming up. Okay? It's like when you're dating, what keeps coming up when you're dating? Money? Nobody's talking about money, everybody's showing off, especially dudes. No, don't worry, I have that covered. Even though you should. Man, I have that covered. I'll never forget when my wife and I were dating a million decades ago. This me taking her to a fancy restaurant that I could not. Sick. Diving. Real love. And I know very well after that date that I will be strapped for some indefinite period until the next payday back in those days, which was, God forbid. So not money. Other than money. What keeps coming up when you're dating other than money? Sorry? You guys don't date? What the hell? Maybe David just wants to say. Okay, let me help you. Kissing. Oh my God. I was gonna say, couldn't wait. I'll pick you up with tires. Kissing. And like going out, hanging out, whatever it is. See, that's CV's gonna send me. Oh boy. Could you actually be getting through all the things? Okay. Yeah. So like stuff you do when you're dating, these things never go away. They keep coming up. Assets, liabilities, they keep coming up. Bank loans, payables to whomever, light bill payable, water bill payable, loan payable, whatever payable it is. And then of course on here, over here is your investment. You invested 3,000, next year another 2,000. So it's important to make sure you keep those foundational issues close, because see, they keep coming up. What about down here? What's that? I remember. What's this box here?
It's gonna. Oh, no.
Business transaction that affect.
Classification.
Oh, this is classification. So what's, oh, business transactions, okay. Did your text say anything about the last one? No. But basically, we already had that discussion. Business transactions which affect what? Financial position. So all of this buying and selling activity are business transactions. How well we manage them, how well we pay our bills, how well we generate revenues. All these things will determine how those statements that we talked about. See those statements again, back to them. We keep going back to the fundamentals, the ABCs of things, and even life is that way. There's certain things we, no matter what we do, how sophisticated we come, how much money we get, we still have some fundamental things that we go back to. Accounting is no different. Okay, so these concepts then are the concepts that assist us in analysis. Help us to make a decision as to what is to be debited, what's to be credited, how do we classify the transaction, what should go to cash, what should go as an asset, what should go as a liability, what should go as equity. That's all the analytical process is about. Okay? Just like if you're in a meeting with somebody, you're analyzing each other. Is this person a liar or not? This analysis. Are they kind or not? Are they helpful? All of that is part of, and so this is all we're doing using these tools in accounting to help us analyze. Now, once we understand these basic things, then we can start practicing now, see, practicing how to record. Now, this is where you don't just wave a magic wand. You have to actually go through the process one by one. Now, chapter 2 has a whole bunch of business transactions in it. Did anybody find the first transaction yet? If only out of curiosity, the first business transaction. You will see it because you'll see a yellow thing on the top, followed by a blue box, or a blue box on top, followed by a yellow box. Keep flipping the page until you see business transactions. No. What's the first business transaction?
The double entry.
Well, we talked about the double entry. Okay, what did we say the double entry was again? For every debit, there must be a credit. Okay, so now, and that the amount should be what? The same, yeah, equal. So we can move on until we get to the first business transaction, which is that box down here. Anybody sees the first business transaction? For the journal? Don't worry about it. Remember, you guys are just doing this for the first time. I just have you on an exploration. Don't worry about it. Just keep flipping until you think you see it. First transaction should maybe have a blue and yellow box together. What do you see as the first transaction? There you go. Blue and yellow box. What's the first blue and yellow box? Yeah, blue and yellow. I see some blue and yellow here. Blue and yellow here. Any blue and yellow here? No, so the first.
On July 1st.
Okay, what happened?
John Blue invest 40,000 in cash.
Aha, now we're getting warm. Everybody see that? Tom Jones, sorry, not Tom Jones, what's his name? Jones? Oh, okay. Invest how much? Uh-huh.
In cash to the Form Design Studio.
So he's starting a business. So his first business transaction is his own personal investment, correct? What is the journal entry in your text for that investment? It's right there in the blue box or the yellow box.
Cash.
Debit cash
Credit.
and credit.
Capital.
Yeah, capital. Okay, capital for 40,000. How much we debit cash for?
40,000.
Why?
They have to equal.
Why?
They have to equal because
What's the principle? Yeah, it's the double entry principle. But yes, that's why. Just want you to remember the name. Okay, so Isaac, what is the double entry? So what the hell is double entry? Okay. All right. So the first transaction then that goes into the journal is to debit cash for 40,000, credit capital. Now, what is happening here? All this owners, what kind of business is this anyway, out of the three? Have you figured it out yet?
So,
A sole proprietorship. All this guy Jay did was to take money out of his personal savings and put it where? In his business account. Under what principle? Not equity principle. What do we call the principle when we move it from our personal and put it to business? The separate entity principal. Remember? That's all that's going on here. He saved 40,000 or more, took 40,000 out of his personal account, put it into his business account. That's it. See that? Now, before I go on with any of the other transactions, let me say this. In accounting, we have something that we call normal balances. You'll see that when you read it. Sometime this week. The normal balance for an asset is a debit balance. Please make a note. This stuff, you don't just grab it because you feel good. You have to actually learn it and practice it.
Repeat that,
The
normal.
normal balance for an asset, it is for asset, is a debit balance. The normal balance for an expense is a debit balance. The normal balance for withdrawal from the business, taking money out, is a debit balance. So any ledger account that you see that is an asset, expense, or withdrawal, you know that that balance must be a period, no feeling about it. That's a rule. Similarly, the normal balance for a liability account is a credit. The normal balance for an equity account is a credit. The normal balance for a revenue account or sales is a credit. Okay, folks? Don't lose any sleep over it. Just learn it. That's never changes. Ever. Okay? This is something you just have to learn and practice over time until you get comfortable. So if I have cash here, which is an asset, right? What's the normal? Let me just say this. This is a ledger account, often referred to as a T account. You will read that. Okay. Over here, we always have the debit, and on the right-hand side, the credit. Never the other way around. Can you do it? Yes. But we do it consistently so that people are not mixed up like this. Accounting is a very consistent subject. Once we do things a certain way, we stick to it unless something extraordinary happens. Okay. So this is an asset. The normal balance would be a what? Debit. So we debit this for $100.
I don't get.
I'm so happy you said that. Because the question is, why don't you get it? What about it you don't get? It's okay that you don't. That's not unusual. Let's say you don't get it yet. Hang in there. Okay? Just remember that you have to learn the rules. Okay? What is the rule of chess? You can only move in a certain direction. If you go in any other direction, you're disqualified. You can't. But why? Feel it. Who gives a damn what you feel? The rules are the rules, yeah. So because it's a debit. I know that's weird, isn't it? As opposed to what? Could it be something else? It will.
But then now he's in a normal balance.
You said asset is a credit?
You know, I said you have. What is a debit and what is a credit?
No,
Yeah.
no, I see what you're doing is you're thinking about it like how bankers think about when somebody says credit my account. That's not the way accounting works. See, for example, here's what we could say. I could say that my children are good to me and therefore they are credit to my life, meaning there's something positive, right? That's not the credit and debit we're talking about in accounting. This is an English language structure for something outside of accounting. You understand? Maybe not, but you'll get it. Okay, something being a credit to you is not the same as a credit in accounting. Necessarily, unless it's what? Revenue. Is revenue a credit to you? Why? Because you're making money. Therefore, it's a credit to you, but that's only incidental. The rule never changes. That's why we call them normal balance rules. No matter what else you're thinking, where else you work, whatever else they tell you, that has nothing to do with the accounting rules. When you play cricket, you have cricket rules. When you play baseball, you have baseball rules. Doesn't matter what you think about anything else. And accounting is like that. So you just have to learn it exactly how it is and do not add anything to it. And eventually it'll become clear as sin.
Like, say, I mean, to memorize what it means, I think you could say credit takes away
You could,
and then debit added.
of course, for her, credit takes away, debit adds. That works for some people. And as you get better with it, you'll refine it even more. You'll refine it even more. You get it? Doggone it. I told you. Yeah, just like that.
Mm,
It's like your, I'm gonna give an example. What's a human example? Oh, it's like your first kiss. Anybody remember the first kiss? Like it's egg. Like you just egg it up, like bite somebody's teeth knock. Just egg it right up or something. But after, it's like that. So it's you're beginning to, yeah. So these are the rules for debits and these are the rules for credit. They never change. So if I have a liability over here for $100, where will I put that? On the debit side or the credit side? See, liabilities are always. So I'm gonna put it on the credit side. If I have a revenue account, sales of $300, am I gonna put it based on the rules on the debit side or the credit side? How much?
300.
300, exactly. If I buy a piece of equipment for $1,000, equipment, that's an asset, isn't it? Am I gonna put that on the debit side or credit side? 1,000, see that? So once you learn the rules, that's the key.
Under asset, what is the E for again?
Expense.
Expense?
Oh, this one?
Yeah.
Oh, yeah, expense. All right, so there you go, warming up. All right, so the first transaction is the investment in the new business that Jay is starting. All right, there's a little blue box, isn't there? What, do you see a T account in that blue box? What is the name of that T account? It says assets? Only one account? We have the whole 9 yards there. Cash. We have assets here.
Cash is under it.
Cash is under it. Okay. And what do we have in this account called assets?
That's why we debit the 40,000.
Debit on one side, credit on the other.
We debit the 40,000 to assets?
Oh, no.
No.
I can tell right away because I know. What is the name of the first account?
What is the cash account? That's
Yeah,
the
that's
one
the
there.
cash account. Use the ones.
What about the one to the top? Does it have a name?
That's just
No, it's
assets,
just assets.
that's just the equation.
Oh, assets equal liabilities? Yeah, just to remind you, newcomers. Okay, soon you wouldn't need that to guide you, like, I don't need that. You throw it down, I don't need that anymore. So, this is our first journal entry. Journal entry, and then we post it to the ledger account. See? Ledger. So what do we post first? The cash account. What's the balance of cash? What do we do the cash? Debit or credit? Debit for how much? 40,000. What do we do with this?
We credit owner's equity.
Capital.
You
We
mean,
credit.
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 which account do we credit?
We credit,
The business itself,
You mean this?
the capital.
The capital account. Remember, capital is the investment account. Okay, so we credit the capital account for how much? 40,000. So that transaction is now journalized and posted. After this posting, what's the balance in cash? 40,000. Did you guys balance your checkbook? You didn't spend any money yet? 40,000. What's the balance in the capital account after the transaction? 40,000. You go. Don't worry, you're gonna get a chance to spend some of this soon. What's the next transaction? Yeah, the journal entry, no, the transaction itself. Like here, we said he invested 40,000. What's the next business transaction? Uh-huh,
Rents an office for Blue Design Studio.
uh-huh.
It's 3,200 for 2 months rent in advance.
Okay, so he rents an office, pays 2 months rent in advance. How much is it? How much? 32. So his first transaction occurred July 1. In accounting, the dates are absolutely crucial, and they must be in what order? Chronological. You can't put the 30th, the 2nd year, the 29th year, the 15th. Accounting is not that haphazard. Transactions must be recorded in the daily sequence in which they occurred. No matter when you record them, they must be, you must put the transactions in the proper date order before you record them in the journal and before you post them. They must be in the proper date order. Chronological, first, second, third, fourth, fifth, 29th, 30th, 31st, all the way through. Every single time. Some people egg it up as usual, trying until the auditors discover and say, wait, one cotton picking minute. Who trained this person? Or if they were trained, what are they up to? By changing up the dates. What the hell are they doing? So July the what? July 3rd. He prepaid rent. For how much? 32? What do we debit?
The extension.
What do we call the account?
Prepaid rent.
Prepaid, PP in accounting is prepaid. For you guys, I wouldn't mess with no PP. You go to sleep and get like, what the hell is that? Free. Yeah, she's like, you're right. Write it up. Uh-oh. The sheriff must be approaching 9 o'clock. So hold that thought. Okay. Hi, sweetheart. Kiss my foot. Okay, I'll be out shortly. Okay. So, question.
Okay, I understand it says that economic event that is not a business transaction. However, why was in the 5,200 listed as a transaction rather than the 3,200?
Now, what does the 52 represent?
It says that he ordered $5,200 worth of office supplies.
And then what was said after that?
When an economic event is not a business transaction, it is not recognized and no entry is made. In this case, there is no confirmation that the supplies have been shipped or that child or that title has passed.
Yes. And she always picks up the sneaky stuff. Like I said, I know you guys gonna read it. She's hold it one cotton picking minute. How much is that amount? 5,200? She said, what about that 5,200? Shouldn't we record that? If it was a completed transaction, the answer would be yes. But when you make an order for accounting, that transaction is not yet complete. It is only complete when you actually take physical possession of the product. See, accounting does not record on what is going to happen. Do you follow that?
I think in order like when you order online.
Well, when you order online,
you
yeah,
pay with
you pay, okay? That's a different kind of transaction. Okay? But when you order, for example, a ship, again, when you pay, then they'll ship it to you. Doesn't work like that in the other trade environments for accounting purposes. When you order, that's fine. Do whatever you have to do. Bring the documents to accounting. Accounting, though, will not record that in the general journal until they've verified that the shipment has reached the company.
Okay, so what date would you put it? We ordered them on the first, it doesn't reach till the 30th. What date would you put the 30th when I
30th for
put it
accounting
there?
purposes would be considered the transaction date.
Okay.
So you can see the order date and transaction date are two different periods of time as far as the accounting is concerned. The company orders on the 3rd, it comes on the 30th, the transaction is considered to be what? Occurred on the 30th, when the shipment is actually received.
Okay.
Absolutely. Very important point. So therefore, in this example, no entry because the company does not have legal possession of the goods. In the case of Amazon, for example, when you pay your money, then you have legal possession, so to speak, even though you don't have the goods yet. But in business, you don't have legal possession till your possession. And so the accountants are not going to record anything in anticipation. They're going to record once they verify. See, verify. Accountants do not deal in wishful thinking. Things have to happen. Like, for example, if I put a ring on it, Nancy thing. Does that guarantee the person's going to marry you? No, accountants will not record that as married. Hell no. They're going to put marriage payable or something, marriage receivable. Might happen. Now, once you go up, see, and say the vows, you have to finish all that first. Then the accountant will be like, oh, now they're married.
Like, is there a certificate for
Yeah, all that.
Ah.
And then show him the certificate. Where's the certificate? Don't tell me you're married. I don't give a flying fish what you tell me. Verify it. Bring the document. Accountants don't operate on no hearsay. And anybody who operates on hearsay, they're ignorant, untrained, or up to. In the accounting kitchen. And we know in accounting, anytime you have cooking, that's a dirty, nasty, stinky word. For sure. All right, so that's a very good observation. Please, when you read that and you get your text, try not to read over it, see? All right, so the second actual transaction is the prepaid rent. Prepaid rent. Debited for how much? 3,200. And what did we credit? Did we? No, it should be there in the yellow box. We credit cash. Because money is going out. In other words, if this is your cash account right here, let's say this is your cash account. We debited cash for how much? 40, right? And we paid how much out of that? 32. So we credit cash to reduce it. See that? And so the balance of cash is now? How much? Oh, by the way, you need a computer calculator for your class, for every single class. How much? 36,800. Just like your cash book. Sorry, your checkbook. If you make 3,000 a month, you want to check every bloody 3,000. So you take out that loan payment to Commonwealth Bank for 450 for that job, and you bring down it, bring down the balance for that. Then you like furniture plus 375. Oh Jesus. I shouldn't get them thinking furniture. Yeah. So just like, so it works it's kind of the same way. Okay, just a little more formally. All right, so we have the transaction recorded for the prepaid rent. Now this rent is prepaid, meaning it's paid in advance, correct? So that's why it's an asset, because if you prepay or paid in advance, the landlord owes you 2 months. And since the landlord owes you 2 months, it's an asset for you. Because you own the 2 months until you use it up. Uh-huh. So now that we have the journal entry, what two accounts do we post it to? It's right in the journal entry. Don't lose any sleep. Prepaid rent for how much? Since that's an asset, normal balance an asset, debit, 3,200. Credit, cash, cash is going down, so we're reducing cash, so we credit cash for 3,200. Simple as that. Well, it gets simpler as you practice. See, you have to practice. Because see, you have to learn these funny words, learn what they mean, learn where to put them. There's no magic. You have to go through. And if you get stuck on a couple of transactions, so what? Be stuck. Google it. Send me a text. Write a colleague. Whatever the hell you have to do until you unclog it. And then you move on. That's the whole idea. You're not expected to come in like in perfection. Doesn't work that way. Okay, transaction number 3. July the what? 5th, okay. What happened?
Office supplies ordered on July 2nd and an invoice for $5,200.
Aha, now he receives it. So he physically takes possession. We can now record it because it has arrived. It is not arriving. Accountants who operate on arriving. Everybody else operates on that. Like they have a glass of wine. John, the shipment should be here soon. Fine, they have that discussion. Accountants don't. We don't engage in that crap. We wait until it's actually arrived and the invoice is in our hands. John, I have it. Let's go ahead and record it or bring it up. Dude, when you bring the document and after I verify it, then I shall record it. You don't like that? Send me home. Because according to GAAP, what's GAAP? And the rules by which accountants operate, just like any other profession, this is what we're required to do. Would you require your doctor to take a shortcut that doesn't fall within his rules? No. So why do you want me to do it, Jonathan? $5,200. What did he buy?
Office supplies.
What do we debit? Journal entry. What do we debit? What is it? Shouldn't it be there?
Yeah, the office supplies.
Yeah, office supplies. So how much? 5,200. And what do you credit? Accounts payable?
They have accounts payable, but why wouldn't we direct them? If we paying it, are we paying this? We paying this, right?
Well, I don't know. What's the credit side of the entry?
They said accounts payable.
Accounts payable for how much? For 5,200. Good. Now, if you have questions, I expect you to have it. Anytime you see a payable, it means the company owes money, which means that these office supplies were not paid for in cash. They were purchased on credit. So he owes the supplier of these goods. How much? 5,200. See that? That's why I was telling you, there's no magic in it. You have to go through the process. It's like being pregnant. You have to wait day by day, week by week, month. You can't hurry nothing up. Especially babies, they don't care. They have their own program. They tell you what they're doing. And you just wait, right, Mom? Mhm. Man, I remember when my wife was pregnant with my baby back then. When she was like, 8 months. Oh my God, she could hardly move. Like, I had to take her everywhere, put her in the chill, pick her up, rub her back, rub feet, bathe her, dry her off. I'm like, man, this is great. All right. What was that before that? Yeah, that was great. Okay. So This company purchased these goods on credit, so they owe $5,200. So this is the journal entry, you receive it, it's an asset, you owe that, it's a liability. How do you post it? Two accounts again. You notice how consistent it is? You're just learning what to debit, what to credit, and the language of. Yeah, the language, absolutely. While we're looking at the procedure, we're also learning the language because they work together for you to do it properly. So we debit what? Office supplies for how much? And we credit accounts payable for? Absolutely. Don't worry if you don't get every single one right. Don't worry if you don't remember every single one. So what? It's like when you're saying ABCD, actually Q, Z. You egg it up for a while, right? Until you finally get it's the same thing. Don't be like, I must be, nothing's wrong with you. All right. One more transaction, then we'll break. And finish up on Monday. So I won't assign any homework for this until Monday. Because I want us to go through these steps that are very important. Okay? Final transaction for the night. July the,
6.
what happened?
John purchased office equipment totaling $16,320 for Blue Design Studio.
Okay,
John pays $13,320 in cash and agrees to pay the rest next month.
on credit. Okay, so what do, now we go to our journal entry, what do we debit?
We have an office equipment.
Office equipment, for how much?
16,320
$320, and what do we credit?
cash.
Cash for how much?
The
$13,320.
$13,320, and the difference, accounts payable for how much?
3,000.
3,000. Notice the debits always equal the credits. So you paid 13,320 in cash, the rest of it on credit. Okay, so let's do one more, posting. What's the asset account we post to? Office equipment for how much? 16,320. 320, and then we credit cash. Now remember, we can have like, this is one big cash account going on and on. I'm just showing it separately for simplicity. So I'll put the cash over here. How much? 13,320. And what's the other credit? What does AP mean again? Yeah, AP account like that. For how much? 3,000. Okay. And that transaction is done. Now, what would happen if the boss says, I want to know what the balance of my cash account is after this transaction? Assuming we recorded everything correctly, this should be 40,000, right? That. This is that. Which is same thing. We put it up separately. So let's say this is the only debit that went in, and these are the only two credits. What would be the balance in cash after these two transactions? 13,320. You paid this and you paid that so far. What would be the balance in cash account?
From the $40,000.
I hope so.
Okay, sorry, I cannot see.
I'm here and I can't see. So don't worry about it.
40,000 from the 3,200.
Which is a balance in cash out?
23,600.
23,000. 23,600. It's your cash balance. How about that? Take that to your boss. It's money, 23. Then we start with 40. Yes. Don't forget, I told you not to pay all that money. You want to do everything in cash or whatever. And this is how the decision, see how it works? What about the accounts payable? How many transactions do we have there so far? 52 and 3,000. How much do we owe now in total on credit? 8,200. So now you see, I hope, we're gonna finish these transactions up on Monday and then go forward. So here's your misery altogether. Get the textbook or the copies or whatever by hook or by crook by Friday. Okay, that's the first thing. This weekend, read chapters 1 and 2.
So when you're doing this before homework then.
Which one is that? From chapter 1?
That's number one.
Oh, yeah, homework for chapter 1 is due on Monday.
Oh, we must read?
That's the one I'm doing.
Yeah, read chapters 1 and 2. I think what I'll do to save you guys some stress for emailing homework and all that, homework will be due on the following Wednesday. So you can bring it to class. Yeah,
Cause you know, job, right?
yeah, absolutely. Plus emailing this crap and then when you email all kinds of crazy. I know. She knows. Honestly. Yeah, she knows like. Okay, so get the textbook. Read chapters 1, 2, and 3 for Monday, because remember, we're finishing 2 on Monday, the transactions. And then next week, remember, this is not a regular semester. Like we can like surf. Time is short.
And we'll discuss on Monday.
Yeah, on Monday, we finish chapter 2, and then we go right into chapter 3. So you have Monday night and Tuesday to read chapter 4. Just remember what I said Monday. We're gonna do at least 1 chapter per session, 2 chapters per week.
So we reading 1, 2, and 3 for Monday. And
Yes,
then the homework is due Wednesday. So
yes,
there's a chapter 4.
on Wednesday.
Yeah.
Yes, absolutely. So you guys should have a pretty busy time. And if you don't feel busy, you should feel guilty.
They can be busy this Mother's Weekend.
I know if your mother, take a few moments, nurse the baby, kiss her. Bree doesn't have any choice. She's gonna have to study and hold like this. You guys have been wonderful. I'll see you on Monday. If you run into any issues, please send me a note. Sorry, Monday, and I say, we see you virtually on Monday. Yes. Take care, be safe out there. Oh. Oh, sorry, did everybody fill the sheet? What, okay, everybody? Okay, great.
Thank you.
You're welcome. Take care. Take care. Yeah, fill this in for me. Please. So you get credit for being present.
So, I have a planned vacation on the 31st.
What's happening on 31st again?
That is midterm.
When you
I
plan to
didn't
travel?
know I was gonna actually
I know,
register for this class
I know that is. When did you plan to travel?
on the 31st.
I'm coming
So
back.
I'm coming back that Monday. So be the 31st to the
That means you have to do your exam when you get back,
okay,
or if you're bold enough to attempt it before you go.
either one.
Okay, as let's say around the middle of, is that June? Is that June or middle of May?
Yeah,
Let's say around the week before you go. Man, that's not too far away.
no,
That's week
that's
after
3
next,
weeks,
isn't it?
yeah.
What do you prefer to do it before you go or when you get back?
Let's see how, in 2 weeks, how it is.
You let me know in 2 weeks,
Yeah.
whether you want to do it before you go
Before,
or when you
yeah,
get back.
yeah.
Do that, okay? Keep me
Yes.
posted, so we can make whatever arrangement we need to make.
Thank you.
You're quite welcome.
Good night.
Okay, take care.